As of January 2026, the most prominent technical entity in the digital asset market is Chainlink. Chainlink is solidifying its position as essential infrastructure, bridging traditional finance and the future on-chain economy, extending beyond the mere realm of virtual assets. Official data collected in early 2026 shows that the cumulative transaction value enabled through Chainlink technology has reached a staggering $27.64 trillion. This serves as clear empirical evidence that the technical foundation, established by Chainlink, is already supporting a significant portion of the global economic system. Recent movements by major figures on Wall Street and in Silicon Valley suggest that this shift is a structural transformation rather than a temporary trend. Larry Fink, CEO of BlackRock, and Rob Goldstein, Chief Operating Officer, provided deep insights in a recent economic commentary, comparing the current asset tokenization market to the early stages of the internet in 1996. Just as the era when Amazon sold only $16 million in books passed and today's tech giants were born, tokenization technology is currently in its infancy, but is analyzed to undergo explosive growth over the coming decades. They predicted a future where all assets are integrated and managed through a single digital wallet, emphasizing that the tokenization of real-world assets will maximize the efficiency and transparency of financial markets. Within this macroscopic flow, Chainlink is proving its value as the most integrity-focused data supply chain, connecting real-world assets to blockchains. January 2026 is likely to be recorded as a historical turning point, where Chainlink directly connected traditional equity markets with digital asset markets. On January 6, 2026, the global derivatives exchange BitMEX fully adopted Chainlink's data streams technology to launch a 24-hour, year-round equity perpetual futures market based on stocks and exchange-traded funds. This allows users worldwide to trade major corporate stocks, as well as S&P 500 and NASDAQ indices without trading hour restrictions, using Bitcoin or Tether as collateral. This innovation is possible because real-time quotes are reflected through Chainlink's high-performance data supply chain, even when traditional stock markets are closed on weekends or holidays. Chainlink data streams provide precise price information with sub-second latency, which is an essential technical foundation for high-frequency trading and complex derivatives management. The barriers to entry for institutional finance are also lowering at a rapid pace. On January 14, 2026, the Bitwise Chainlink Exchange-Traded Fund successfully listed on NYSE Arca and began official trading. It proved high institutional interest by recording $2.59 million in net inflows on its first day alone. Prior to this, the Grayscale Chainlink Fund, which converted to an exchange-traded fund in December 2025, demonstrated strong demand for regulated investment products by attracting approximately $63 million in funds in a single day. The emergence of these financial products signifies the securing of official channels, through which institutional investors can safely participate in the growth of the Chainlink ecosystem. Furthermore, CME Group, the world's largest derivatives exchange, announced it would formally launch Chainlink Futures and Microfutures Con February 9th, officially recognizing Chainlink as a mature asset class with price discovery functions. In terms of technical evolution, 2026 is projected to be a year of dramatic leaps. Through the 2026 roadmap announced in January, Chainlink presented the completion of a global on-chain financial system as a specific goal. The core of this roadmap is the Cross-Chain Interoperability Protocol version 1.5, scheduled for release in early 2026. This update will provide an autonomous environment where token issuers can integrate assets themselves and set their own rules, and it plans to significantly increase network scalability by adding support for highly secure zero-knowledge rollups. Additionally, the Confidential Compute Service, unveiled at the end of 2025, will begin its early access phase in early 2026. This technology is an innovative solution that allows financial institutions to utilize the transparency and security of blockchain without exposing sensitive transaction data and business logic on public ledgers. This will be a critical key for the broad adoption of Chainlink technology in fields where privacy protection is essential, such as banking, healthcare, and identity verification. The economic virtuous cycle structure is also becoming more robust. The smart value recapture mechanism introduced by Chainlink is an innovative model that captures Oracle-related extractable value occurring in decentralized finance protocols and redistributes it to the community and protocols. A representative lending protocol achieved the result of recapturing over $1.77 million in value through this system. By the third quarter of 2025, a portion of these earnings flows into the Chainlink Reserve, utilized as a resource to support the long-term security and growth of the network. Currently, more than 1.4 million Link tokens have been accumulated in the Chainlink Reserve, and on January 1st, 2026, an additional 94,967 tokens were deposited. This proves a structure where the economic value of the token becomes more solid as network usage increases. Market sentiment and actual indicators are also sending positive signals. According to recent reports from Santiment and Glass, phenomenon has been captured, where whales or large-scale holders have been intensively accumulating Chainlink since early January 2026. In particular, the instance where large investors withdrew 4.5 million Link tokens, worth approximately $62 million from exchanges to private wallets during 1 week in early January, reflects strong market confidence in long-term value appreciation. The fact that the supply of Link on exchanges has dropped to a near historical low of 12.5% can serve as a strong technical foundation for price reappraisal due to future demand increases. This is analyzed as a typical accumulation pattern, contrasting with individual investors who sell in response to temporary market flows. The change in attitude of governments and regulatory agencies is another noteworthy factor. The Genius Act, signed in the United States in July 2025, officially opened the era of dollar on-chaining by clarifying the legal status of stablecoins. Sergey Nazarov, co-founder of Chainlink, emphasized that this bill will grow the stablecoin market to $1 trillion scale, and that Chainlink's proof of reserve technology, which transparently proves asset reserves, will become an essential standard in this process. Already, the U.S. Department of Commerce is directly providing national economic indicators, such as GDP on the blockchain through the Chainlink network, which demonstrates deep trust in Chainlink's data integrity even in the public sector. Chainlink, which currently occupies about 70% of the global decentralized finance market, is now expanding its stage to traditional finance as a whole. Global economic leaders such as Swift, J.P. Morgan, and MasterCard are already experimenting with the efficiency of on-chain financial services through Chainlink's runtime environment, achieving results such as shortening transaction settlement times from days to minutes. The broad ecosystem and technical completeness of Chainlink established in early 2026 are like a massive blueprint leading the digital transformation of global finance, beyond simply the growth of a single project. The technical stability possessed by Chainlink stems from a thorough security philosophy that has delivered over 19 billion verified messages without a single interruption, or security incident over an operational period of more than 8 years. Since all processes from data collection to verification and final consensus are performed through a decentralized network, no external pressure or manipulation is possible. Based on this trust, more than 2,400 projects have been built on Chainlink, demonstrating the powerful network effect of the Chainlink ecosystem. The future Chainlink will open in 2026 is a necessary process of securing transparency and fairness in global finance beyond simple technical progress. And Chainlink is already in the midst of that change. Chainlink's economic system has a structure where, through payment abstraction technology, fees are automatically converted into Link tokens and settled. Even if companies pay with various assets, this is a sophisticated method that creates organic and continuous demand for the token, while easing the burden on companies to hold Link tokens directly. As the actual utility of the technology increases, market supply decreases and the scarcity of the Link token increases, completing a virtuous cycle structure. Through this process, the Chainlink Reserve has come to hold nearly 1.5 million tokens, serving as a reliable support for the long-term operational stability of the network. The development of the blockchain abstraction layer emphasized in the 2026 roadmap allows companies to communicate with multiple blockchain networks through a single interface, without complex technical barriers. This solves one of the biggest challenges companies face when adopting blockchain technology, and foretells that Chainlink will function as the practical operating system of the digital economy. As asset tokenization accelerates and the regulatory environment is refined, Chainlink's automated compliance engine and security standards will become the most reliable guidelines for financial institutions to launch innovative services with peace of mind.